Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Tuesday, May 28th, 2024. Let's take a look at the charts. I'm going to start with the big picture as always. The big picture, long-term trends are the underlying current, if you will, of the market. If you use a wide, deep river as the analogy, it is the undercurrent that is the longer-term trend. So in this picture, I see the longer-term trend as heavy, bearish, below 220.18. If Tesla can close above this one-year descending channel top over the coming weeks, it is a turning point as we move into later year. But until then, this is your sell opportunity. I'm talking to those of you who may be invested in Tesla and are sort of itching to get out of it at a key price point. I think this is a key price point, and of course closing above it would be an indication to jump back in and go long. But until then, we could fail from here on a quarterly basis perhaps and fall to new lows from the April low, I should say. And in fact, this trend line will be something of an indicator. I've been saying this, I don't know why I keep drawing this out here for you, but it is there as a support level. 141.04 did contain selling pressures about 5 weeks ago. At the time, we had, I think, as a session containment level, not as a weekly support level. But I think it is symbolic in any event that if settled below, would then indicate the 101.81, a low from January 23. I do think holding below 220.18, you can anticipate over the coming months the 101.81 low from January 23. Potentially lower. Now, I don't mean to sound incredibly bearish. We will take our sell signals one signal at a time, and there's nothing to say that we won't over the next month or two close above 220.18, and then we shift, our perspective shifts bullish, and I think realistically so as we move into later year. Let's take a look at, kind of backtrack a little bit and show the fact that we did close above a descending 3-week channel top last week at 169.52 today. That is just an intraday support level because we view this market right now as bearish below a rising channel bottom that we closed below last Thursday at 180.90. This did contain roughly last Friday's highs. And assuming we open below 180.90 today, that is Tuesday, this market can ease south, possibly back to the 169.52 level that I show again here on this chart. But it is holding below 180.90. These are the exact same charts with different line studies. Holding below 180.90, we maintain a 1 to 2 week target at 159.50. That is actually in reach quite possibly by the end of this week. If we close today below 169.52, then I think you can expect the 159.50 within just a few days, where we can place a weekly low and round up from here on a weekly basis, possibly on a 2 to 3 week basis. As I've been saying, I think this is our downward pivot point as we move through the month of June and into the third quarter. I do see that a settlement below 159.50 as, yes, of course, we would quickly test within a matter of probably 3 to 5 days that long-term trend line at 149.04. But, really closing below 159.50, I think is the downward pivot point. As we move into the third quarter, I see a settlement below 159.50 as carrying with it the possibility of that 101.81 January 23 low. I know that's a bit of a stretch, and you can respect 141.04 on the way down as being able to contain daily, possibly weekly selling pressures. But if you're long Tesla on a longer-term basis, and you're looking for a point, a technical point to sell, to exit that position on weakness, I think 159.50, a settlement below that formation, is a valid a sell signal level. Until then, you can bottom pick this, and from here we can round up to channel resistance, which will be a little different at the time. So that kind of covers the downside. 180.90, if you're short from last week below 180.90, below this formation, my suggestion is to stay short. Day traders may consider, covering at 169.52. You may even consider going long at 169.52 on a day trade basis, possibly back up to the 180.90 formation. But once again, breaking 169.52 is an indication, I think, for a good high for the day itself, and certainly closing below 169.52. That targeted 159.50 formation is likely within several days where we can place a weekly low. So if you went short last Thursday below the 180.90 formation, my suggestion is to still hold out for 159.50 as an area to take profits. And perhaps if you're a 1 to 2 week swing trader, for instance, consider going long. These levels, 180.90 and 159.50, are both 3 to 5 day swing trade, 1 to 2 week swing trade, and solid day trade levels. Day trade level is also 169.52 on the way down today from 180.90. Now, if we push above 180.90, 189.26 is possible today. We have minor points mapped out that are all valid day trade levels, 183.87, 186.87, but 189.26, especially if we open today above 180.90, because bear in mind that opening above 180.90 is also a gap higher opening above last Friday's 180.08 high. And that could carry with it aggressive follow-through buying early in the day, could yield 189.26. And certainly closing back above 180.90 would neutralize last Thursday's 1 to 2 week sell signal down to 159.50. And with that, we would expect probably this week 194.76, which is a meaningful resistance area, able to contain buying possibly through June trade. We could fall away from here. Keep in mind that 194.76 exists within the confines of that long-term channel top at 220.18. In fact, if I were to put both of them on a daily chart, it would look like this. 194.76 is a longer-term channel top inside of the even longer-term channel top that is 220.30. 194.76 is an area that may well contain buying through June, and we can fall away again from here because, after all, the longer-term dynamic, the one-year dynamic, remains bearish below 220.30. The trend is your friend. So 194.76 is a valid level to at least take profits on a long position that you may have entered following the settlement back above the 180.90 formation. But 194.76 is also a valid level to short sale as we move through the month of June. And of course, closing above 194.76 is a meaningful buy signal on a 2 to 3 week basis, then anticipating the 220.30 long-term channel top. So there's a lot here. I cannot really confidently anticipate testing 220.30 unless we close above 194.76. That is my upward pivot point for testing 220.30. Until then, 194.76 may well contain buying through June, and we can fall away again from here. And if we're talking big picture, once again, I will re-mention the 159.50 level that we're not going to see today, but may well see by Friday's close below 180.90. And if settled below, would be a significant sell signal as we move through the month of June and even into the third quarter. Under that scenario, I do see the 101.81 January low as in reach within a couple of months of closing below the 159.50 level. You know, I think I have said it all. Please click like, share, subscribe. Check out wickedstocks.com. We offer a 5-day free trial. I'll be back, of course, tomorrow with Wednesday's Tesla report, and you have a great day.